Hi everyone, let's go over my macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the macro bullish scenario where we are looking for a finished wave 1, finished wave 2 and now a bigger 3 towards the upside, which usually is the strongest and most impulsive wave in an impulsive structure where you really want to see price moving up vertically with volume going up as well. Now let's start with the fib times that you see taken from the low to the all-time high, and as you can see the low of wave 2 has been made before the 0.382 fib time, which is quite rare as usually corrective structures will end after the 0.382, but in this case that clearly did not happen. Now if you would put this wave 1 to the right as well as this wave 2 as I've seen here and there and then move the fib time from the COVID low to the all-time high, you can now see that wave 2 ended right on top of the 0.618, which is good for a wave 2. However, the problem now is that this structure over here looks very much like an impulsive move, but this being a wave C has low probability, because this then being a wave C means you have an A expanding flat B and then a wave C to the upside, but this B is very deep compared to any potential wave A structure over here, which has to be a 3 wave by the way as well. So a 3 wave up, 3 wave down, 5 wave up. So for me personally it makes more sense to put wave 1 here, wave 2 down here, which then is the COVID dump, and move the fib time to the left, but then the 382 is not really matching with the low of wave 2. Of course it can happen that a corrective structure ends before the 0.382, anything is possible of course, but probabilities wise it is not as nice. What we can also see is that the Fibonacci's that you see in the chart, where the most common target for a wave 2 is the 0.5 to the 0.786 fib taken from the low to the all-time high, you can see that the 0.5 Fibonacci has not been hit by the low over here of wave 2, meaning that it did hit a rare target for a wave 2, which is the 382 Fibonacci, but it actually did not hit any of the common targets of a wave 2 in an impulsive structure. Finally, I like to talk about this pink wave over here. What you see, this pink structure is a bars pattern. It's a copy of the chart of this wave 1 over here. We have to realize that if this is the beginning of a bigger wave 3, as mentioned, it should be the strongest, most impulsive wave in an impulsive structure in general. In a 5-wave move to the upside, you expect wave 3 to be the biggest, strongest, highest volume, all that good stuff. But if we look at this wave 1 over here and we look at this little bit over here, then you can see a straight up comparison between the two waves. First of all, this structure, which represents this structure, was a lot more vertical in a shorter amount of time. And that is something to also keep in mind, that when we look at this structure over here, it is not even as impulsive as a wave 1 of a wave 1. We are now looking at a wave 1 of a wave 3. Where is the impulsivity, right? Where's the volume? Where's the big candles? Where's the big move to the upside? So for me, looking at this structure over here, the only way to make this bullish still is that this structure is a wave 1 of a wave 1 of a wave 3, meaning, let me draw this on the chart, that this is a wave 1 of a 2, 3, 4, 5. Then you go down again in a wave 2, before then a 3, 4, 5, where then that is the high of a wave 3 over here. So we then have this as a wave 1 of a bigger wave 1 of then a 2, 3, 4, 5, right? So a wave 1 of a 3, then I can imagine, yeah, it might take more time. It is not yet as impulsive as this structure over here, but we have to wait and see how price is going to develop towards the upside. If we go to the bearish scenario over here, then we are looking at a finished 5-wave impulsive structure to the upside once again, but now the correction is not yet finished and we are still expecting lower lows to be made. In this scenario, we are then looking for a 3-wave structure to the downside, where if we zoom in to where price is right now, we are looking for a zigzag, which is a 5-wave move to the upside, where likely wave A is already finished, potentially wave B is already finished here as well, and we move to the upside in a wave C, or we might drop one once more for a lower wave B and then move towards the upside. But that is of course something I talk about in the daily updates that I do. But then we are going to be looking for a move to the upside also in this macro bearish scenario towards 40k to around 50k. Now this area is so important because we have the golden pocket taken from the all-time high to the low over here, which is in confluence with a very big point of control of this whole range. So that is incredible resistance around 39 to 40k, and around 50k we have the 786 in confluence with the value area high, which also is incredible resistance. Now if the low of wave B is already in over here, and we then take a trend-based fib extension to estimate the high of wave C, we take it from the low to the high of the yellow A to the low of B over here, then the most common target for wave C is between the 1 and the 1.236, which is between 50k and right about 60k. If the low of wave B would move towards the downside, then you can see the target of wave C is moving down as well, and that wouldn't be a bad idea. But nonetheless, the 1-to-1 in confluence with the 50k level is very interesting in case price is moving to the upside. And we have to remember that if price moves down once more, we are still looking for upside in this scenario. It just means that the target for wave C will move to the downside as well, confluence again with this 40 to 50k area. Now after C is then finished, we expect another move towards the downside where we have incredible support between 11.5k and about 8k, where we have the golden pocket over here, which is taken from around the 3k lows to the all-time high. We also have an incredible value area high over here from a multi-year volume profile range, which is very, very big support indeed, nicely in confluence with the golden pocket. And also if the high of this yellow wave C and therefore B is ending around the 786, then the most common target of this potential wave C or WXY, it doesn't really matter target wise, is the 1 to the 1.236, which also is in nice confluence with the value area high as well as the golden pocket. So this is incredible support for Bitcoin. If we then go to the daily time frame and I go to the linear chart, then what we're looking for in the daily time frame over here is the first scenario where the low is already in, wave 2 or B ended, and we are now looking for an impulsive structure to the upside, where this is only the first move of a bigger move towards the upside. Wave 1 or A is finished. The fibs that you see on the chart are taken from 15.4k to the high over here, and you can also see that the 0.382 has been hit, but the 0.5 did not. And you can also see I color coded wave 1 and 2 with the green 0.5 and A and B with the purple 382. The reason is that for a wave B, the 382 is a common target, but this is a rare target for a wave 2. If price would have moved down, hit the 0.5, this is a common target for both a wave 2 and a wave B, but then the probabilities for this potentially being a wave 2 would increase. The fact that price now bounced on the 0.382 gives higher probabilities, right, towards potentially a wave C, but that also depends on how price would then move towards the upside, because a wave C tends to be a bit more lazy around the 1-to-1 area of a potential wave A. You can see that over here, the Fibonacci time 1-to-1 taken from the low to the high of A to then the low of B is basically comparing the time it took to develop A with the time it will potentially take to develop C. And if price is going to reach that 40k, 44k area around this 1-to-1, we have to keep in mind it might be a potential wave C and not an impulsive structure in a wave 3. If, however, price moves towards the upside a lot quicker, more impulsive, far in front of this 1-to-1 fib time, then the 1.618 is a very important target, which is sitting at 50k. So you can see, right, wave C target 40k, wave 3 target 50k. You can see the macro scenarios coming back. This is the main area of resistance on the Bitcoin chart on the macro, which also delivers us the targets for a potential C and a potential 3, after which you then expect 4 and 5, of course. But nonetheless, you can see the confluence between the different scenarios. What is nice, however, for both a 2 and B is that this low has been made after the 382 fib time, taken from the low to the high over here, which is usually, as mentioned, what that you want to see. That's usually what you want to see for a 2 and a B, corrective structure being longer than the 382. That's nice. Now in the other scenario that I have on my chart here, we might still move to the downside once more. Wave A or 1 is finished and we are now in a 3-wave structure to the downside, where then the target of interest is going to mainly be between the 0.5 and the golden pocket, which is between 23.3k and 20.7k. Of course, this depends on how price is moving towards the downside, and also again my daily updates where I go over the medium time frame, which is this structure over here, will give you more probabilities of this scenario playing out, but it at least is something we have to keep in mind. And if price would move towards the downside over here, we have some very nice support, of course potentially this low as well, just in case price wants to wick a low at 19.5k, dip below 20k and then move up, psychological number of course. So this is something to keep in mind. If we then finally look at the probabilities of the different scenarios, then on the macro time frame at the moment, it is for me very neutral, because with the bullish scenario we are expecting a move to the upside, but also with the bearish scenario we are expecting a move to the upside. Of course it happens in waves, right? Nothing might go up in a straight line, but we do like to see that 40 to 50k area hit, and depending on how price is going to move towards this area and what it does and how it reacts in this area, we can then give more probabilities to this bearish scenario or the more bullish scenario. And if we then look at the probabilities on the daily between this scenario over here where the low is in and we look for upside, or where we are still going to make a new low and continuation, basically depends a little bit on how price would potentially move to the downside, which is something that we're looking at on the medium time frame. Now so far what happens more locally over here looks corrective for then the probabilities being on the side of this over here being a wave 2 or B, and then we expect continuation. So we do expect a move to the downside, but then the probabilities are currently higher that we then get a bounce towards the upside. But it does depend on how price moves down. If we get a very high amount of volume and it looks very impulsive to the downside and potentially an ABC structure, as that is then the scenario to look for, well then we do expect price to move towards this lower area for then potentially a bounce again towards the upside. But at the moment as it stands, based on what we see in the range, the probabilities are a little bit higher for this scenario to have the low of B or 2 over here and then continuation, and then we wait and see how price is going to move to the downside and take it from there. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.